Monthly Economic Update, December 2024. Welcome to India Business Insights. As the year comes to a close, we look at the state of India's economy. In the recent months, we heard about a consumption slowdown and decline in the GDP growth rate in Q2. Further, the stock market, which seemed to be on steroids for more than a year, has been soft. So, what is really happening? In this month's edition, we bring you the latest developments and key highlights from India's dynamic business landscape. From economic indicators to sector-specific updates, we will look at all the critical areas including economic growth, market trends, policy developments, and opportunities. We will explore the performance of key sectors, government initiatives, and emerging business prospects. Whether you are an investor, entrepreneur, or simply interested in India's economic journey, this update provides valuable insights into the current business environment. Don't miss out on understanding the pearls of India's economic ecosystem. Stay informed, stay ahead. Remember to like, subscribe, and share this video to support our channel. GDP. The Indian economy demonstrated remarkable resilience in November with the HSBC Flash India Composite Purchasing Managers Index PMI reaching 59.5, signaling robust business expansion and economic activity across multiple sectors. This upward trajectory indicates strengthening economic momentum, particularly in service and manufacturing domains. The second quarter of fiscal year 2024-25 witnessed a GDP growth of 5.4%, slightly moderated from the previous quarter's 6.7%. This nuanced performance reflects complex macroeconomic dynamics, with manufacturing sectors experiencing subdued output at 2.2%, while service sectors maintained steady performance at 7.1%, and the primary sector showed gradual improvements. While definitive December data remains pending, economic forecasts from leading institutions like JP Morgan suggest potential GDP growth between 6.3 to 6.5%, anticipating recovery in key economic indicators. Recent signals such as robust GST revenues, impressive retail vehicle sales growth, and positive manufacturing PMI trends provide optimistic insights into potential economic directions. As of December 2024, India's GDP growth for the September quarter was 5.4% year-on-year, the slowest in nearly 2 years. In comparison, GDP growth was 7.8% in the June quarter. This slowdown is attributed to high inflation, which has consistently exceeded the Reserve Bank of India's target range of 4 to 6%. Inflation stood at 6.9% in November, with food inflation being a key contributor. For instance, vegetable prices surged by 25% year-on-year, severely affecting household consumption. The RBI has revised its GDP growth forecast for FY 2024-25 to 6.6%, down from its earlier projection of 7.2%. Meanwhile, gross-domestic capital formation, a measurement of investment activity, grew by 6.8% in the September quarter, indicating strong government-led infrastructure spending and private sector investments. However, rural demand remains weak, with rural wage growth stagnation at 4.2%, below inflation rates. Some of the weakness have been attributed to a subdued wedding season. While there have been many marriages in November, the marriage season is likely to positively impact the demand growth from January. International institutions aren't just observing, they are impressed. The IMF projects a 7% annual growth, positioning India as a beacon of economic potential in a complex global landscape. CPI. On December 15, 2024, the latest Consumer Price Index (CPI) data was released, revealing significant economic insights for India's inflation landscape. The annual inflation rate for December 2024 stands at 5.48%, showing a nuanced economic trajectory compared to previous months. This figure represents a slight increase from November's 5.12%, but remains within the Reserve Bank of India's target range. The RBI continues to monitor these trends carefully, balancing monetary policy to maintain economic stability. The inflation rate suggests potential moderate interest rate adjustments, ongoing supply chain challenges, resilient economic fundamentals. The data reflects India's complex economic landscape, demonstrating both challenges and opportunities in the current financial environment. The annual inflation trajectory reveals a complex economic landscape for India in 2024, characterized by nuanced price movements and strategic economic management. Rural inflation registered at 5.95%, significantly higher than urban inflation at 4.83%. Housing inflation remained stable at 2.87%, indicating controlled real estate price dynamics. The inflation journey throughout 2024 demonstrated remarkable variability. The lowest point emerged in July at 3.54%, while peak months between August and October witnessed fluctuations between 5.2% and 5.6%. The calculated annual average stabilized at approximately 4.95%. These inflation metrics suggest sophisticated monetary policy implementation, reflecting the Reserve Bank of India's strategic approach to economic stabilization. The data indicates resilient economic fundamentals and balanced growth mechanisms. The inflation narrative for 2024 underscores India's economic complexity, showcasing the intricate interplay between regional economic variations, consumer price dynamics, and broader macroeconomic trends. The comprehensive inflation analysis provides critical insights into India's economic performance, highlighting the nation's adaptive economic ecosystem. How to deal with inflation and how to use the monetary policy to stimulate economic growth also remains a point of contention between the Reserve Bank of India and the government. Foreign exchange reserves. India's foreign exchange reserves experienced a modest decline of $1.988 billion, settling at $652.869 billion for the week concluding on December 13, 2024. The reduction was predominantly attributed to a decrease in foreign currency assets, which contracted by $3.47 billion to reach $562.576 billion. The Reserve Bank of India's weekly data reveals nuanced movements across reserve components. Gold reserves showed a slight uptick, increasing by $1.121 billion and reaching $68.56 billion. Special drawing rights and reserve position with the International Monetary Fund witnessed marginal reductions. Despite the recent downward trend, India's forex reserves continue to demonstrate substantial resilience. The current reserve level remains comfortably positioned to cover approximately 11 months of import requirements and represents around 96% of the country's external debt obligations. The gradual decline from the peak of $704.885 billion recorded in September can be primarily attributed to strategic interventions by the Reserve Bank of India aimed at managing rupee exchange rate dynamics and maintaining macroeconomic stability in an increasingly complex global financial landscape. These reserves serve as a critical buffer, providing India with significant economic flexibility and investor confidence in the nation's financial robustness. Export-import. According to the Ministry of Commerce and Industry's official data, India's trade performance in November 2024 revealed significant economic dynamics. Merchandise exports contracted by 4.85% to $32.11 billion, while imports surged by 27% to $69.95 billion, resulting in a record trade deficit of $37.84 billion. The cumulative exports during April-November 2024 reached $536.25 billion, registering a positive growth of 7.61%. Total imports for the same period aggregated $619.20 billion, showcasing a 9.55% increase. A notable highlight was the unprecedented gold imports, which reached $14.8 billion in November. However, a Bloomberg report suggests potential data calculation errors, with officials potentially overestimating gold imports by almost 30%. The Commerce Secretary Sunil Barthwal attributed the export contraction to declining petroleum prices, while non-petroleum products exports grew nearly 8%. Trading Economics estimated India's exports to be around $36 billion by the end of the quarter, with long-term projections suggesting exports could trend around $40 billion in 2025. However, the Export-Import Bank of India Exim Bank projected merchandise exports for the October-December 2024 quarter to grow 1.85% to $107.5 billion. Specifically for non-oil exports, they forecast a 7.39% growth to $91.7 billion. IIP, India's industrial production showed a modest growth trajectory in October 2024, expanding by 3.5% year on year, which was marginally up from September's 3.1% growth. The National Statistical Office data revealed nuanced sectoral performances, with manufacturing growing 4.1%, mining expanding 0.9%, and electricity generation increasing by 2%. For November 2024, ICRA anticipates the Index of Industrial Production (IIP) growth to accelerate to approximately 5 to 7%, driven by favorable base effects and potential sectoral improvements. The cumulative industrial output for April-October 2024 stood at 4% compared to 7% in the corresponding period of the previous year. Trading Economics projects India's industrial production to be around 3.1% by the quarter's end, with long-term forecasts suggesting a trend around 4% in 2025 and 4.3% in 2026. The projections indicates a gradual recovery and stabilization of industrial output, reflecting the ongoing economic dynamics and sectoral resilience. The data underscores a cautiously optimistic industrial landscape, with manufacturing and core sector industries showcasing resilience amidst global economic uncertainties. Infrastructure. India's infrastructure landscape in December 2024 showcased a strategic allocation of Rs 11.11 lakh crore, representing 3.4% of the GDP. This allocation is a projection for infrastructure development, not actual spending, highlighting the government's comprehensive economic planning. The infrastructure allocation for December 2024 represents a carefully crafted financial strategy targeting critical national development sectors. This projection encompasses railways, transportation, digital infrastructure, renewable energy, and other key economic growth areas. The Rs 11.11 lakh crore allocation signals the government's commitment to long-term economic transformation, aiming to support India's ambitious goal of becoming a $7 trillion economy by 2030. The projection demonstrates a forward-looking approach to infrastructure investment, balancing immediate economic needs with future growth potential. The allocation strategy emphasizes public-private partnerships, attracting domestic and international investments across multiple infrastructure domains. Financial institutions like the Reserve Bank of India play a crucial role in facilitating these projected investments. This infrastructure investment allocation represents more than a financial number. It embodies India's strategic vision for comprehensive national development, economic resilience, and sustainable growth. The government is actively promoting public-private partnerships, offering viability gap funding, and developing market-based financing frameworks to attract increased private sector investment. Long-term interest-free loans totaling Rs 1.5 lakh crore were made available to states to support infrastructure development aligned with their specific developmental priorities. Sector-specific initiatives include continued expansion of the Pradhan Mantri Gram Sadak Yojana to provide all-weather connectivity to rural habitations and targeted infrastructure investments in states like Bihar, Assam, and others affected by national challenges. The infrastructure investment strategy remains crucial to India's economic vision of achieving a $5 trillion economy, with a sustained focus on creating high-quality, transformative infrastructure assets that can drive long-term economic growth and regional development. Overview of economic performance in 2024. India demonstrated remarkable economic resilience in 2024, with multiple global agencies projecting robust growth and positive macroeconomic indicators. The country's economic landscape was characterized by strong performance across multiple sectors, reflecting strategic policy interventions and global economic adaptability. The fiscal year 2024-25 witnessed a GDP growth projection between 7% and 7.2%, with the International Monetary Fund endorsing a 7% annual growth trajectory. The first quarter GDP growth reached 6.7% year on year, signaling sustained economic momentum. Manufacturing, construction, and service sectors contributed significantly to this growth, with manufacturing expanding by 7% and construction sector growing 10.5%. Macroeconomic indicators showed encouraging trends. Inflation moderated to 3.65%, fiscal deficit reduced substantially from rupees 6.1 lakh crores to rupees 2.8 lakh crores, and bank credit growth accelerated to 15%. The stock markets reached record highs, mutual fund SIP contribution doubled, and foreign portfolio investments demonstrated renewable confidence in India's economic potential. The World Bank's medium term outlook remains optimistic, projecting continued strong growth in subsequent years. The debt to GDP ratio is expected to decline from 83.9% to 82% by FY 2026-27, while the current account deficit is anticipated to remain stable at 1 to 1.6% of GDP. India's economic performance in 2024 underscores its position as a resilient and dynamic emerging market capable of navigating complex global economic challenges with strategic vision and adaptive capabilities. That's all for today. Thank you for joining us on this economic exploration. If you found this update informative, please hit the subscribe button, share with your network, and leave your comments below. Your engagement helps us bring you more in-depth business insights. Until next month, this is India Business Insights signing off. Stay informed, stay inspired.